Hey everyone, this is Jeff Praissman with Interactive Brokers Podcast. It's my pleasure to welcome back to the IBKR podcast studio, Scott Bauer from Prosper Trading Academy. Hey Scott, how are you?
Jeff, fantastic. How about yourself?
I'm good. And for our
Good.
listeners, every other Wednesday, Scott comes into the studio and we talk about the market, the past week or so, what's coming ahead. We do that's a quick 5 to 7 minutes, just so everyone can kind of catch this on their lunch break or whenever they're around and just kind of get a good market update. So, and you can find more from Scott at prospertrading.com, as well as on our website under education. And you can find previous podcasts and webinars from Scott Prosper Trading Academy. Hey, Scott. So last week, oil prices surged as the U.S.-Iran tensions escalated, and Treasury yields actually rose right along beside them. So with investors starting to price the idea that energy-driven inflation could keep the Fed from cutting or even pushing it toward hiking, what does this in energy inflation rates linkage kind of tell us about how fragile the broader disinflation story really is?
Oh, it's everything. It really is, because the Fed has to analyze this data on the whole and not just month to month. So if you go back, and this is backwards looking in the rear view mirror, those numbers for CPI and such look pretty good, because from a month ago, we saw fuel prices down. Now they've risen again. And this is kind of this ebb and flow back and forth. So it's a little bit difficult for the Fed to be data dependent on how inflation is reactive to fuel prices when we're seeing fuel prices literally trade on tweets and just social media commentary. So that's a tough one.
Yeah, and then we actually had like a stronger than expected new home sales report. But the last couple of weeks, both the S&P 500 and NASDAQ had weekly declines. So what do you think this is saying about the market psychology when we're sort of seeing some solid housing and earnings data, but we're getting a broader kind of risk-off sentiment?
Jeff, for a very long time, we saw buy the dip.
Yep.
We're now in an environment, I'm not going to say sell the rip, but we're now in an environment that this is really a sell first. So on rallies, we are seeing the broader sentiment being, okay, I need to be on the sell side first. I think that's going to change really soon. I think that's going to change as we get a little bit deeper into earnings reports. And if we continue to see a really good story about the economy, about these companies, then that'll flip to buy the dip again.
I feel like we could go into the t-shirt business. Buy the dip, sell the rip.
Flipping over,
I
exactly.
mean, we could go on the boardwalk and hawk some t-shirts and make some money. But you led me perfectly to my next question, because this week brings a heavy load of earnings from several of these large tech companies. I think Apple's Thursday. And given the recent pattern of this CapEx guidance, sort of overshadowing revenue strength, do you think the market's tolerance for AI spending is going to kind of keep up, or do you think it's going to just stay concentrated in tech, or they're going to be kind of more forgiving at this point with it?
I really hope for the market's sake that it stays within the tech sector, maybe branches a little, because if we start to see increased CapEx spending everywhere else, I think that puts a lot of psychological pressure on the market.
Mm-hmm. Yeah. And then, as always, we have a full slate of economic data. I feel like every time we talk, there's always a full slate of economic data and the earnings. Got the Fed meeting coming up in a little bit today. Which macro release this week do you think will have the most potential to move markets? And does it matter more than the upcoming Fed headline itself later today?
Yeah, sure. So we have the Fed headline, in a little bit today, and they're going to say what they're going to say about the data. But I think tomorrow's PCE report is going to be very critical to the sense that, is it going to support what we saw with CPI, that things have calmed down a bit? The conundrum with that is, if it does show that, has it slowed down because of those energy prices coming down also that we just saw? So PCE is going to be really important as maybe the driver of, okay, is inflation maybe under control this month?
Right. All right. Well, Scott, as always, this has been great. For our listeners, again, you can find more from Scott at prospertrading.com, as well as on our website, interactivebrokers.com. Go to education, click on the podcasts and webinars. And Scott, until next time, thanks for stopping by the Interactive Brokers podcast studio.
Thanks so much, Jeff. Have a great one.
All right, you too.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry or sector trends, or other broad-based economic or political conditions, It should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice.